Okay, real quickly, I just want to take a look at a hourly chart in the S&P, something to maybe watch out for. This video is being brought to you by oldschoolcharts.com, where we learn how to use old-style charting techniques to understand today's markets. That said, we can get rid of that, but you remember it. This is an hourly chart. We have the 1040 low down here back at the end of September. And if you've looked at some of the other videos I have, you'll know that I believe is the right shoulder to an inverse head and shoulders pattern that broke out over the neckline, which is shown here in kind of the pinkish purple color. And then once that broke out, we had an implied target of 1250, which is derived from the distance between the neckline and the bottom of the head of the pattern. And I'll zoom out and take a quick look at that in just a second. But from this point through till today, which is October 13th, we have pretty much stayed in this parallel channel. You can see that once we got over the neckline, there was some activity and pull back to the neckline, tried to get free, couldn't do it, tried, couldn't do it, tried, couldn't do it, and finally it did break out over this almost 2-week long consolidation. Came up and hit this green line. The green line is the long-term bear line that starts on the top of the very top of the bull market in October 2007 and is also drawn over the top of the April 2010 highs. So now we're over that. Once we got over it, we came and, surprise, pulled back at an area right on that green line, and also not coincidentally on this bottom channel line. Today we had a strong move. If you looked at the video yesterday about the overall S&P, you would have learned that move was not unexpected. I would have been surprised if we'd come down at that point. But again, charts they have perfect retrospect because you can draw the lines, but the predictive nature of them isn't 100%. I'm thinking we're probably on this pattern. We're probably 75% likely of hitting that 1250 target. How we get there exactly, I cannot tell you. There's a decent chance we just run on up in this channel till we get it. Anyway, this is what's going on right now with the S&P. Additionally, if we move in even closer and spread that out a little bit, we've got this little line that can be drawn across those peaks. And I would kind of expect, even though that's a rising line, and rising lines don't offer the same kind of support in rising markets, that in other words, you can break out of a rising channel and then very easily come back into it. So you could say this broke out of that rising channel. It could come back down below it. But I would expect there to be some support just a little bit north of 1172 tomorrow. I'm expecting maybe a day that pulls back 5 or 6 points. If it pulls back below this bottom line, if we were to get back under 1157, 1158, I would be very, very surprised. I think we're now primed to make a run up here at this top line, somewhere probably in the low 1200s. But that's just my opinion, and all I am is a guy who draws lines on charts. You need to make your own decisions, look at your own charts, and draw your own conclusions. And so anyway, I hope this maybe helps things a little bit. Let's back up to the today very quickly, and you can see what I was talking about that line drawn over the top of the bull market across the April highs. We are now clearly, unmistakably above that line. I called it yesterday that We were now above it, but I wanted to see more. Today we got the more. Have fun. Thanks.